Of all the crazy Tesla rallies, this one takes cake.
I mean, the fundamentals have never, to me, been worse.
Yeah, I mean, you've got a hyper growth price on a stock that's shrinking.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember.
And we are back with another edition of the Daily Dots. And I am joined, as always, by the brain trust himself, Mr. Chase Taylor. So kind of a, well, probably welcome. Kind of a boring day. Some interesting movement underneath. Seems like all the issues for Tesla and Carvana have clearly gone away.
Those are good.
Yep, they're fine.
They probably announced a partnership we missed or something, but
something. I saw a company announce that they were working on a small project with Palantir. There was virtually no information disclosed, and on that news alone, I think the stock was up 30%, something like that.
Halo effect.
Well, which makes some sense.
Oh, I know what you're talking about. Actually, Les Shrub was all over that.
Yeah,
he was in that bad boy before it happened.
Oh, he was in that stock before it happened?
So anything that's adjacent to, first of all, the administration, but also Palantir or like Anduril, like any of that stuff, he's watching for that stuff. And he found a couple little companies that at least are pretending to have deals with some of these companies. And he's found a couple little gems.
I love it, man. Shrub unapologetically plays like
he calls it the golden age of grift, and he's playing things that go along with it. Like, why not?
Yeah, well, and that's what's obviously we sold too early because we paid attention to fundamentals. But that was one of the reasons that we rode Palantir so many times. Like, other than the fact that they were more real, I think, than so many of those other tech companies with ridiculous multiples. But you could sit there and watch it. And it reminded me of 2021, where all you had to do to find winners is go look for speculative type tech companies that were fairly new and unheard of that hadn't gone on a run yet, especially if they've IPO'd in the last year or two. Remember when it was like that? You're like, hey.
CoreWeave today, 400% growth, I think I saw that they announced. So
yeah. So all you had to do was just go find something that fit the narrative that hadn't popped yet. I remember that UPST thing. Remember the one that what's his face, or I can't remember what his name was, but just total grifter. He was on CNBC and they're like, what does that company do? And he didn't know.
I remember that. Yeah.
And he's like, oh, we're having technical difficulties. I lost you in my feed. Right. I remember we made that was one of those SPAC companies. And we literally, small trade, obviously wasn't, but we're like, oh, it hasn't run yet. Let's buy a 2% position. And sure enough, just it's, and to watch that going on again in a non-ZERP world where there's no QE or anything like that is pretty wild, man.
True. And even a somewhat subdued, liquidity world, because you can have a bunch of liquidity, as we learned in the last 2 years, without ZERP or QE, but you can even do it with QT, as it turns out. But yeah, no doubt.
And that's why we were just talking about this off screen again. But look, nothing in this market's going to surprise me, but that's why I'm not nearly as bullish as some of these bulls, just because this is a decidedly bit different backdrop in every way, shape, and form from any big rally that we've gone on.
Yeah, I think basically a big recovery from the drop that was policy driven, and so you just kind of went back to where you came from. Largely.
Yeah, and you were coming from a pretty frothy place, right? I mean, so yeah, I'll tell you, man, and this is the one that you rolled out there, or at least you were the first one talking about it that I was aware of, was talking about the potential for that bull trap at the previous all-time highs. as this has gone on, it's one of those things that's just played out in my head over and over. And it just makes all the sense in the world to me because now if you break out above that and everything, all bets are off. Katie bar the door, all that kind of stuff. But if you think about the players, right, at the top of the S&P, you look at the action you saw in Apple today. Now they could be up 3 or 4% tomorrow. So, whatever. But then you look at like those companies are in very different fundamental places than they've been in the past previously when markets were running. And now everybody's like, what do you mean? Tesla's going. I think you're getting right back into the area to short it again. Obviously, if we do that,
a little ways to go, but we're on our way.
Of all the crazy Tesla rallies, this one takes the cake.
I mean, the fundamentals have never, to me, been worse.
Yeah, I mean, you've got a hyper growth price on a stock that's shrinking.
And I remember, 4 or 5 years ago, people talking like, "Oh yeah, well, they're about to have major competition," and they really didn't. No. I remember like kind of rolled my eyes at that, like, or I would believe it, and then I would go look into it, and like, yeah, no, not really. But now, like, their competition is
brutal.
It's better than them. Like, so I don't. Yeah.
Well, and when the competition is and globally, and when their competition was primarily the legacy U.S. automobile,
right? That's easy.
Yeah, I'm not worried about that. BYD is a completely different animal.
Exactly.
Completely different animal. Then now you've got Slate coming after him too, Rivian, Polestar. Like the game has changed, man. And BYD, for instance, I mean, think of how many Model 3 purchases BYD is soaking up. Tons.
I mean, especially in the emerging world. I mean, and that's where all the growth, if you think about economic growth and population growth in the next 20 years, that's in the emerging world. That's in places like Southeast Asia. And to get your foot in that door and compete is going to be a huge deal and for automobile industry. And I suspect, the Chinese manufacturers are going to outcompete people like Tesla in those markets. Because price matters a great deal in those markets.
Yeah, I think if you're a Tesla long here, look, I don't like to. Elon Musk, for a variety of different reasons, is not a guy that I want to bet on or bet against for prolonged periods of time. Because I do think he is decidedly different than some of the other grifters running these companies, meaning Elon has pulled stuff off. You and I have talked about it. He's pulled stuff off that he said he was going to do, that when he said it, I thought it was complete garbage and completely made up and just trying to pump the stock. I am not saying that he is the paragon of corporate virtue. I am not saying that his word is gospel. What I am saying is that a lot of the stuff that I thought was just meaningless hype, just a pump effort, he accomplished. He pulled it off. So not a guy I want to bet against, but I think that you've got a very interesting problem right now with Tesla. First of all, you've got a valuation that makes no sense unless you've got an FSD that is dropping immediately, which he doesn't. The other thing is this FSD market is decidedly different and getting increasingly different every single day, meaning Waymo owns 100% of that market and it is growing fast, right? So it's not the same market that you thought it was going to be when he first started talking about that, right? Everybody goes, yeah, robots. Okay, when do you think that first robot's coming out?
Yeah, and how profitable is it?
Well, and that's where I think that you do look at Elon's back, his history. And I don't know, I don't understand how, I mean, where's the Roadster? Where's the semi-truck? Remember, we were supposed to have legions of semi-trucks, right? Now, we said from the very beginning, the semi-truck was a zero. Just because if you understand long-haul trucking, it is not feasible.
Yeah, battery technology is not there.
You're just not there. Yeah. You're not there. It's too uneconomical. But so you've got two things you're relying on here. FSD, that is nowhere close to the opportunity it was when he started. The other thing is I would tell people is when you were on the way up in Tesla, when you were on the way up and you hit this market cap the first time, you know what their margins were? They were like 4x what they currently are.
And he has to keep giving up margins.
He has to
compete.
Yeah.
It's either you don't compete or you don't get the margins. So
because
that's what's so impressive about like a BYD is they have great profitability, great margins, while still being hyper competitive, crazy low prices, but also still having, quality, and I mean, just have it all.
Yeah.
So it's tough to compete with.
Who's involved with that? Are there any, I know Munger and Buffett were involved early on. I think they still bought someone that was private.
Yeah. Long time ago. I want to say that was probably through Lee Lu is who I think Munger probably was originally invested in it.
Did he? There got to be some. I would think there have got to be some guys there that worked at automobile companies before. This does not feel like you know what I mean? This doesn't feel like a bootstrap startup kind of situation. The way they've operated, they seem to be. It doesn't feel like a group of tech bros that set out to make some electric cars.
The founder owns 17% of it too.
Is that Lee Lu, the guy?
No, he's an investor. Wang Changfu is the founder, chairman, and CEO, and he owns 17% to this day.
I just think about what got Buffett and Munger.
Berkshire owns like 4 to 5% of the company, making it one of the biggest foreign investors. Himalaya Capital apparently owns a good bit.
You know what's funny to me? Why? Well, you and I have talked about this before, and I still haven't found a good answer for it. Why Buffett and Munger didn't seem concerned about owning Chinese stocks?
I mean,
because they're Buffett and Munger.
They are pretty good at looking through stuff like that, but it's not like they own a bunch. But
no, yeah, boy. But getting back to BYD, man, that execution is just ridiculous. Why don't you run us through the breakdown of the day?
So, interesting dispersion in the indexes today. So you're basically flat on the S&P, up 0.1, Q's up 0.6. Then you have small caps down 0.9, equal weight down 0.6 with MAG7 up 1.83. So really, this was just
hello darkness, my old friend.
Mega cap tech did it all. XUS global stocks down 0.12. Oil's down a little over 1. Gold down 2. Silver down 2 and change. Dollar up a little bit, not much, 0.1 something. And to me, the story of the day, well, two stories of the day. One was yields, and that's with the 2-year being up about 5, 6, 10-year up 7 basis points. So to me, first story of the day, 10-year up 7 basis points.
Where does that put us?
We are now on the 10-year.
Got to be 4 or 5?
4.54.
Yep, I was going to say 4.55.
You're 5 basis points from that, like, scare back in April where we pulled reciprocal tariffs back 90 days because the bond market was freaking people out. You're basically right back there. You're 1 day away. And the second story to me is VIX. Front month VIX futures up 7%, and then even second month VIX futures up 4% on a day where you're flat.
It's never a good sign.
Yeah. So spot VIX, the fake VIX was up 2%. But like, yeah, VXX was up 2% on the day. Like, interesting to see those days where the market's basically fine, but vols up a little. There's only 1 day, but it took me by surprise.
Yeah, it's never a good sign. It's never a good sign. I'll tell the story, and this has worked out for me multiple times. But where this really stuck out to me is when we had the Volmageddon. When we were watching, I mean, we got used to seeing VIX with a 10 handle on it back then. Remember that? It was just insane. And the reason it's insane is because for the VIX to be there, that means people are selling it there, right? And when you understand how ridiculous it is, right? And all you have to do is long-term average of the VIX is 20, and you had people selling it hand over fist at 10, right? It doesn't take really complicated math to realize that could be a big problem. And I remember, I wasn't the one that came up with the idea. I listened to an interview with Mike Green, but it all came together with me because I remember you and I talking about like, I can't believe what in the world. Remember we were sitting there going, who would sell the VIX here?
The target manager. Remember that guy?
Yes.
He made like $1 million or something. Just
12 million.
Yeah. Being long the short vol ETF was all in on it.
Yeah. I remember the stories. Remember they were talking about getting in a cab and this guy, there's this great company. And then he listed the ticker and it was short vol.
Yep.
And all these people, none of them understood, right, the inevitability of what they were facing. And so the way that I was structuring it, and part of it's just luck, but when you go back and study these things, they seem to have a way of happening like this, where I was like, okay, what I'm looking for is a VIX pop on a green day that otherwise wouldn't be there, right? Now, the setup was a little bit different there because you knew any substantial VIX pop, especially in a serene market, was probably going to make shorts cover.
Right. It was going to create that feedback loop of futures buying to cover, as people got blown out of the ETFs and all that.
But when you look at where we're at on the indexes and on a day like today, seeing the VIX pop 7%, that's enough. If it was up 1.8 or whatever, I wouldn't, when you look at how the VIX moves, that's not a big enough move. When it's up 7, you got to take,
it's weird, and especially with dealers and positive gamma, which is usually just a very low vol environment. You usually compress it. So if we had a repeat tomorrow, say S&P is up 0.3 and vol's up anything, that's where I'd be like, no, what?
Well, the other thing that's concerning too, now everybody's gonna be like, oh, Zach's gonna go on his fundamental. It's not fundamental. It's what stocks are rallying and how aggressively, right? Like that's concerning to me too. And the reason why I say that is that's not durable. The stocks that are rallying are not, there's a lot of times where you can see certain stocks rallying. And actually, this is almost always the case. It can tell you something about the underlying economy. You know what I'm saying? When I see the trash leading like this, that tells me nothing. It just, it tells me that you just...
Right. Yeah. Cyclicals versus defenses, things like that have some information value.
Right.
Different than, and don't get me wrong, like that stuff has properly recovered as well. But
to
see the extremes and the frothy stuff's run, because I mean, and for me, like I've been very open to the bullish case the last 2-3 weeks, but even I'm surprised that what we've seen out of stuff like Carvana, Palantir, I'm just like, whoa. Because I'll give the semiconductors, if the Gulf monarchs are going to throw billions of dollars at Nvidia for chips, like sure they should rally. Like,
well, and that's the one thing I was going to say. On the flip side, I would look at stocks like today, Google and Nvidia rallying. That would be a counterpoint to what I just said. Like that there could be some information in there. I'm just saying, when I look at a day like today and I see, people will look at, oh, it was up again, that's a bullish day. To me, it was a nothing day. If anything, a little bit suspicious because of the action we saw in the VIX. And then, like I said, you don't want to look into these things too deeply, but considering the economic backdrop and where we're at in terms of valuations and on the charts and all that kind of stuff, I just think these are the levels, these are the scenarios where you need to be more skeptical than normal, right? You're not loading up on the S&P down 30%, trading at 18 times earnings right here, right? And people are like, 18 isn't that low. Well,
it is now.
It is now. And it probably deserves to be, right? Like, meaning the long-term profit margins on the S&P 500 were 16% for like a century, right? Now you're 24, 25.
Right.
So you can justify a higher PE level across the index, as much as I hate to say that,
right?
Because I know there are hardcore value people out there rolling their eyes going, oh, Zach's bought it. No, I just...
As if it was tablets, from Mount Sinai that said like the real PE should be 15. It's like, no.
Yeah, I actually thought it was really funny when I first realized that prior to the last cycle, because I'm sure it's edged the average up now, but the historic average PE ratio was right in line with the historic average margin level for the S&P. Kind of makes sense, right?
Yeah, 100%.
Yeah.
Yep.
So if you've pushed the margin level up to 25, now I then somebody would be like, well, 25 is fair. I'd be like, no, I think 25 is too rich And here's the reason why. It's a bunch of mega cap companies throwing off 30 and 35% margins that are pulling that average up, right? But the average company in the S&P does have higher margins than it used to.
Yeah, and just really good earnings. I mean,
Yeah. So, but I'm just, the other thing that is a little bit troublesome here is it's not the setup that we've seen create these sustained rallies, right? Like, it's not saying we have to crater at all.
if anything, to me, it's not a spot for conviction.
One way or the other.
Exactly.
Yeah.
Like, if you're convicted long or a convicted bear right now, like I don't understand it.
Yeah, I don't understand it. I will say this. I think it's harder if you had to make me pick. I feel pretty even on it. If you had to make me pick, though, by and large, I'd probably say I'm leaning to the bearish side. And the reason I'm leaning toward the bearish side is for one reason and one reason alone. It's where prices are at versus the economic backdrop seems to be a bit of a. When I'm looking at the economic backdrop, I think it warrants caution. I don't think it warrants panic. I don't think it warrants, like we've said over and over, I want more international exposure, but I don't think it warrants dumping U.S. writ large, right? But it's kind of a wait and see approach. It's certainly
that for sure.
It is not an environment that engenders, to me, I think the people that are taking this as a risk-on move, you know what it feels like to me, honestly? It feels like a very similar setup and sentiment to right post-election. Like you've talked about it before, the euphoria, the buy the small caps and the crypto ripping and all this kind of stuff. And you're like sitting there going, guys, this is a completely different board than it was the last time Trump got elected.
But I think you do have to get back to all-time highs to suck in everyone again, to have all the positioning, because positioning is nowhere near, other than maybe retail. But other than that, like, positioning is not extreme. You still have people short in futures, underweight, managers. There's still a lot of fuel to go higher from that perspective. But when it comes to the economic backdrop, the way I have it on my notes from yesterday, underline, was like, this year's been all about being Bayesian, and all that means is every single data point, every single headline, you update your probabilities. It's hard. You can't have like some fancy, like, here's how it's going to be, like, viewpoint. Like, you just have to take in, because you think about the headline changes that have happened to us this year. You have to change your probabilities with every headline.
Okay, we've stumbled into and I don't want to be dismissive to people that are listening. I just think that you hit on something really important. I think we stumbled into what should be a really good learning moment for people. And the reason I say that is this is something that took me years and a lot of pain to figure out. When we see investment movies or we read investment books and we hear people talk about it, right? We all think it's the guy that saw it the whole time and didn't capitulate that won. Whenever you hear those stories, first of all, they're almost always embellished, right? They're injecting certainty where there is none. And B, that is not the habit of the best investors and the best traders. It's not even close. And this is a perfect example that you just brought up. If you have a view about how this is going to play out and that's what you're betting on nothing, because nobody, including the people that are negotiating this deal, can tell you how it's going to work out, right? And I know how intellectually tempting it is to have that view. But what I have learned, and am still trying to learn to a certain degree, I think it's probably one of the most common pitfalls of fundamental value, guys, is that you get too baked into what you see being the facts. And instead, you need to, and it kind of goes along the line, quit trying to predict what the market's going to do and be quick to respond, right? Yeah. Especially if you're a trader, right? But yeah, the goal is not to sit back in this scenario and because if you get it right, it's probably putting you that much closer to getting your head ripped off.
Well, yeah, you think about after the housing crisis, like, obviously a lot of people got famous for making money in the GFC. And
It's another good point.
If you go back and look at a lot of the people, a lot of them were very unsuccessful from 09 to call it 2018.
John Paulson comes to
This
mind.
is the first one that comes to mind. Right. So it's like a person that, yeah, got it right, conviction, yada, yada, yada. But then like kind of a one-trick pony, like just nothing really worked from there.
Well,
even Kyle Bass, who I think I like more than a lot of people.
I love him.
Like, didn't have near as much success after. And that's where I think, and this you go look at the Drucks and the PTJs, those guys would change their mind in 2 seconds. So
it's the hardest thing to do, man. It's the hardest thing to do, especially when you get rich and famous for a call.
Right.
And that's another thing that people don't understand. I was thinking about this, because our business has gone through a transition, right? We used to do radio all the time. That was really the source of our new clients coming in. We pretty much squeezed every drop we could out of the whole radio thing. And so now we're only on podcast. But there's a little bit of a insecurity that comes with that because you're like, whoa, this is new. We've always gotten clients off a podcast, but radio was the bell cow, and you have to be willing to change. You've got to be flexible. And one of the things I was thinking about along those lines is it is a lot easier to raise money and to bring clients in when you're not flexible. When you say the same story over and over. Peter Schiff is the guy that comes to mind. He actually has a very successful investment firm. I think he manages $2 billion plus. Okay. But and this is the part about investing that I wish people knew from the outside looking in, right? The guy's performance has not been spectacular at all. I mean, there's worse, but nothing, right? Why did he get that inflows? Because everybody and their mother who thinks for sure the dollar is going to get, just disintegrate, right? They go to him, and I had a client actually leave him and come to us, so I know what I'm talking about. If they get tired of the not great results or whatever the case is, then they feel ideologically married to the guy. Well, I've put up with this pain this long, and I got to know that dollar collapsed just a little bit further around the corner. Like, so when you're actually not a good manager in a lot of ways, it's easier to round up capital.
Yeah, if you keep the faith alive with your great story.
Yeah,
and he tells a great story and has for the last 25 years.
Conversely, and you and I have seen this too, and we've got a lot of friends in the business that have seen it. When you change, even if you're right, you're going to tick off some of your clients.
So everything you're saying is the same for me in the research business. Like, made a bunch of money, and my clients obviously a bunch of money in oil and gas, like 2020, 2021. And then like I turned bearish on both at different points, the next year or two. And I just saw tons of people leave. And some people were just like offended. Like I didn't buy oil because like I am intellectually married to oil. I bought oil because it was cheap and misunderstood. But now it's not cheap and it's not misunderstood. If anything, it's being extrapolated. Remember those like oil 500, 300, 400 calls. And it's like, whenever I started seeing that, and I was like, okay, well, this was nice, but it's over. Yeah, like a bunch of people left.
Yep.
What I like to do is just be so flexible that I know, my client base is down to only the people that get it and like that.
Yep.
To me, I in any business, to me, and I'm stealing this from David Senra, but you optimize for durability, not for growth. And that's one of the ways, that you kind of do that.
Yeah, it's just it's one of the hardest parts about it though is and it goes into, and I'm not sitting there saying I'm a boy. Well, I'm not going to say I'm a Boy Scout. I think that you and I both, probably one of the reasons we work together is we both have a similar level of integrity, meaning I can't go out there and say something just for marketing purposes. I'm not one of those guys. I just can't do it. Right. It just feels too sleazy. Right. So it's not really it's not an option for me. But what people don't understand is that most people in this industry do not have that issue. Right. I mean, they're going to sing their story over and over and over. And like I said, it works. It's a better,
100% works.
Now, I mean, praise the good Lord above. We've had a great run too, and we've had a lot of clients, but we've had some clients leave for the same reason you just said, even though it ended up being right.
Right.
You know, and that's the thing about, you just got to be careful when you're listening to these people. We were talking about another situation today, and not a bad money manager, but very misleading the way he presents himself. I wouldn't say it's very misleading, because I actually respect the guy on a personal level, but yeah, when you see the underlying performance of the investment, it's not bad, but not at all what you'd be led to believe based on the way that he presents. And people need to be really careful about that. You know, on the flip side is, you know, I'm a big believer, if you're going to talk about it when it's good, you got to talk about when it's bad too. Right.
Oh yeah. I mean, that's credibility.
And it's just being honest.
Right.
Like 2023, I spent the entire year talking about how we were flat and the market was up 20+%.
Yep.
That was not fun.
0%. I was here for half of that. So I remember.
Yeah. Well, previous year we outperformed by a pretty wide margin too. So net, it wasn't too painful, but you know, no. And again, we don't do that. You and I both don't do it because we're morally superior to everybody. But if I feel like if you're in this game and you're going to talk about the wins, you got to talk about the tough times and the losses too. Otherwise, you know, if you don't do that, your opinion isn't valid to me. I got no interest in hearing it.
Yeah. And I'm this way. I mean, I don't care if it's a waiter, if it's someone like a plumber coming to my house, like if they're not being open and honest about downsides and trade-offs and drawbacks, and like, it just creeps me out.
Agreed.
People that will come in and offer that, like, hey, here's the bad news. Sorry. Like, just be open about it. Like, I just have so much respect for that.
Yeah. Hit me
in any field.
Yeah. Right. Yeah. Tell me what I don't want to hear.
Right.
That's a big one. Gold getting smacked down pretty good. Not to be surprising to us. You and I were talking about, I don't know if I said this. I'm not sure if you echoed my sentiment. Not surprising to me at all. I kind of thought, based on the way it moved, I would have been shocked if you didn't come down and at least test 3,000.
Yeah, you've been saying that for a little while.
Yeah,
I think we've even talked about, like, 2,800 is not beyond approach by any means.
No, 2,750, 2,800 would be a perfectly normal. If you look at the history of gold market cycle, that'd be a perfectly normal retest.
And it absolutely got overcooked with positioning and sentiment. There's just no two ways about it.
You know, it's something that fascinates me about this market is this market can go from like parts of this market can go from underinvested to overcooked so fast.
Yeah.
It's so much faster than it used to be.
I mean, no one cared about gold recently.
Yeah.
And then it went from that to the most crowded trade on the street.
You know, the home gamers and the people chasing all the ridiculous stuff, they like that feature of the market. I can't stand it. Like, I remember you and I talked about, it was fun being long gold and gold miners the beginning part of the year, especially, I don't know how we didn't get killed more by, when I say we, before you came along, I don't know how I didn't get smoked harder by gold than I did. I think it's just because I've got a history with it and was quick to get out of the way. But to say that it is, as a guy that's been looking for that eventual rally in gold for quite some time, and consequently the miners with it, that was a long, nasty slog, right? And like I said, we didn't own it for the vast majority of that time, but it was always on your idea list. It was always one that you were waiting to pop.
Yeah, something you're not willing to miss.
Yeah, exactly. You're keeping an eye on it. You're not willing to miss it. And but when it started like, I remember us talking about it just a couple weeks ago, going, you're going too hot too fast.
Right.
You know what I mean? You're like,
it was going straight up.
Yeah, and I don't like that anymore. I mean, it feels good in the moment, but the problem, what you want to see though, is you want to see these things just kind of develop on their own, kind of underneath the headlines, right?
I wanted to take the stairs up.
Yeah. I want it to slow walk.
Blend in, man.
Yeah. I want all of a sudden one of those companies to come out with an earnings report and the whole street just to go, what are we missing? You know what I mean? And then see it advance. Now, the flip side is, though, if you're looking at the miners, Yeah, they're getting cheaper again. Like in relationship to like the financial results. I mean, the idea that you can buy GDX here at 45 with gold, call it 2,500. The idea that you can buy GDX with gold at 2,500, that's silly. I mean, $2,500 gold. I don't think most people realize what $2,500 gold means. That's like 45% industry margins on average.
Right.
That's nuts.
It's historic stuff, and it's not valued for it at all.
No, not at all. And that'll continue. But the one thing I am fully expecting is if we think the potential downside move on gold or the downside test here is 2750, got to put 25 in play.
Yeah. If I've learned anything
it's going to test you.
Yeah.
It's going to test you.
And if we keep getting great news, keep dialing back all the bad news and adding good news, like maybe it will. If MAG7 is going to be all you need again.
Here's the interesting thing, though. I see for the first time in a very long time, I see a runway that looks constructive for gold for a long way out, right? Meaning we got a Fed cutting cycle ahead of us, right? That's going to be helpful. I don't think geopolitical tensions are going away anytime soon. I think I am of the belief that the dollar strong cycle is over. I don't think DXY is going to be trading at 68 anytime soon, but
importantly, the desire to hoard dollars in size is over.
Right.
Especially given the backdrop.
Yeah, and that feels structural to me.
Yeah, I think it's proving to be. I mean, you look at the foreign ownership of treasuries, and it's been a melting ice cube to begin with. But that's the only threat, is that central bank buying, because that is underpinning this whole thing. It's hard for me to paint a picture of why central banks are like, yeah, we have enough gold now, but if that were to happen, then you could get that 25 or below scenario. But everyone could sell their ETFs, and you could go down to 28 or whatever. But to me, to go under that, it requires central banks to chill out, and man, that's hard to paint.
The other thing that is interesting to think about, and I haven't really thought about this in these terms. One of the things that, and I remember talking about this, especially, and this is no knock on Luke Gromen, but more in my Luke Gromen days, meaning when I was first coming out of 08, 09, like I said, we had a great run in miners and gold at that point. But you used to, and you and I have talked about this, when you look at these debt situations and you look at the debt spiraling out of control and you look at deficits, you look at all these different things, you think to yourself, okay, it is only a matter of time until that currency runs into an issue, and it's purely a confidence game. Nobody knows when that confidence game is going to stop. I think we might have seen it, though, meaning for so many years, treasuries were looked at as the base asset that had no real risk, right? If everything went to hell in a handbasket, treasuries were where you wanted to be. Better than gold, right? People are like, that's not better than gold. Go look at the performance of gold and treasuries in 08, 09. And I know because I was all treasuries in 08, 09. And funny enough, if I remember correctly, I want to say treasuries generally rallied something like 25, 30% during that period of time. Gold was down 30, right? I don't think that, especially long dated US bonds, I think that the perception surrounding them has changed.
Yeah. In the math, the geopolitical, entire geopolitical structure around owning them. I mean, we just had in the trade negotiations with Japan, they literally threw it out there like, oh, by the way, we own $1 trillion of these bad boys, and we might sell them if you guys push us too hard on trade.
Yep.
Like that's not something anyone would have said 10, 15 years ago.
Well, and here's
especially a partner. It's not like China said, that's Japan.
Yeah, right. Well, and here's the deal. If you're a foreign central bank and you think that U.S. duration is too risky to have on your balance sheet, when you sell that duration, what are you going to put it in?
Right. A lot of people are clearly putting it in gold.
Think about it, right? Like whatever you had in treasuries,
neutral reserve asset,
right?
It's not a liability that doesn't come down to someone else doing everything correctly. Like,
yeah, right.
The last piece I wrote, which I'm sure will be misperceived by people. I called it full faith. We always hear that full faith and credit thing. And I think people always think of the credit part where they just crunch the numbers. Can America pay its bills? Yes, it always can. It always will.
Yep.
But that full faith part, like all the little intangibles, like rule of law, like economic coercion, corruption, all these things we've all taken for granted our whole lives. I would argue in the last decade, and I say decade very intently, not just the last year, but the last decade, some of that stuff started to erode. Even the like economic freedom index and ease of doing business stuff, like all the things that made everything just, you didn't have to worry about America. Like it was fine. They were going to, the deficits, the debt, like you could basically trust all that stuff full stop. And I would say in the last decade, the debt, the deficits, and all those intangible things, you can't take any of that stuff for granted with America anymore. So that full faith part, like, sure, you can do the credit. Yeah, we can pay it. But are we going to pay it anywhere close to what you thought you were going to get in real value?
I was just going to say,
No.
are you going to get a positive real return?
And we're clearly willing to use it in a coercive way, not just in trade deals, but in like, oh, you invaded some people, like we just turned off all your stuff, like, and that has been used not just against Russia but others, or threatened to be used against others, to include pretty friendly places. So yeah, it makes sense for people to go, I want less of that, and I'll take more gold.
Yeah, and it's the other thing is it's fascinating to see it happen in real time. It really is, because you see how perception changes slowly and then all of a sudden, right? And when it does change all of a sudden, usually nobody's paying attention. That's another thing. You've had a big structural shift, and one of the things that you've got to pay attention to that should make you more bearish U.S. policy and U.S. bonds going forward is the fact that you've got a scenario now where you have a populace that is unwilling to accept negative equity returns, right? Meaning if you throw up a couple bad years in the stock market and you're the president, you're probably not getting reelected.
I mean, if they're bad enough, the economy will collapse. I mean,
yeah, regardless of why, right? The stock market. And so then you sit there and then look at the debt problem through that lens, and you're like,
yeah, there is exactly. And that, to me, that's why like you had to essentially cave on the trade stuff, is because you made it so high that all those interconnected things became one big snowball going straight down the mountain.
Yeah, I mean, it was going to smoke you if you didn't.
Right. Like it, obviously the other people involved, China, whoever, was going to feel pain too, but like they didn't have everything levered to that one thing.
Well, the other thing too that we found out, and I think Vietnam's a really good example of this, right? It's not just about who feels the most pain. It's who's willing to put up with the most pain.
Yeah, Vietnam's a perfect example of that.
Yeah, right? I mean, the Viet Cong didn't have anywhere near the capability to go blow for blow with us, but we way underestimated their belly for a fight.
Right.
And what kind of pain they were willing to put up with.
Yeah.
Right.
They would have fought us for another 100 years. The Taliban would have fought us for another 100 years. It's whatever. It's a way of life for them. It's not like a war. It's like, this is just life. Let's do it.
Speaking of which, random story here. Did I ever tell you that story? My wife and I were on vacation in this was a while ago. This is probably like, I want to say it was probably like 2011. We were on vacation in Mexico, got one of these killer deals at this like all-inclusive resort, place looked incredible, right? Online. I get there and they had a sports bar, right? At the deal. In my first little bit of fear was when I looked in, it wasn't sports bar. It was sport bar, and anyway, wasn't quite what it looked like online. We ended up having a nice time, but we bumped into a group of Afghanis, right? Afghans. You call it, Afghans. Yeah. And they're a group of buddies. They were a few years older than us, but they grew up in Afghanistan. And then their families, between the time they were like 9 to 12, their families all moved to Toronto. And every year, they're a group of buddies. They take a trip together. And so I bumped into them down at the pool, whatever. We started hanging out with them. We got into a conversation about Afghanistan. And I'll never forget what they said. This is like 2011. They go, listen, We are fully in support of what you guys are attempting to do in Afghanistan. We're cheering you on. But it's not going to work. And I guarantee you, no matter how it goes, you're going to leave there. And when you leave, they will take back over control.
And everyone knew that. Everyone in Afghanistan they just knew that.
Yeah.
Like that was just and that was why I was like, it was so hard for the coalition to get enough Afghans to like really buy in, right? Because they knew like, well, okay, yeah, but then you're gonna leave, and then I'm the guy that helped, you know?
Yep.
Like,
yep.
no, thank you.
Yeah, no, I'm good, right? And it's just, I will never forget that. I will never forget that experience, but then also watching it play out and realizing how, and it's not just here in the West, it's culturally speaking, how badly we can misinterpret things. And he said, you people in the West, you don't understand. They don't care if you're there to help them. They don't care if you're there to build schools. They're mad because you're there, and they're going to fight you because you're there. End of story. They don't care where you're from. They don't care what you're doing. They don't care what you're attempting to do. They're fighting you because you're there, and that's what they do. Right? It's Scorpion and the Frog.
Yeah, it's
right?
nature.
It's what I do.
Yeah.
So anyway, anything else you want to throw in there today?
No, bunch of data tomorrow. We'll hit it on it tomorrow. At the same time, we've hit this weird stage where we went from like a massive Smoot-Hawley level trade war to taking it all back. So like, I'm kind of like, I don't know how much data really matters in the next month or two, because the market will look through it. So
that's the one thing we can count on.
Which to be is fair at the moment. But,
sure.
So we'll go over it tomorrow, but I don't know how much it'll matter.
Yeah. Is that before or after we load up on Carvana?
Puts, yeah, maybe.
Anyway, all righty, you guys. Hey, the other one I want to hit too, we've got our road show coming up, our webinar coming up May 22nd, next Thursday. Again, there's no fee to that. That doesn't lock you into our protocol to call you on the weekend, like none of that. It's simply a way for us to walk you through who we are, what we do, and how we do it. Takes about 45 minutes. We do a Q&A session afterwards. Typically, we spend the Q&A session not talking about our portfolios, but it turns into like a macro discussion. Just because if somebody wants to talk stocks or econ, you know, who am I to turn them down? You know what I mean? Like, just I'm always up for one of those discussions. Anyway, if you want to sign up for that, it's free. Go to bulwarkcapitalmanagement.com and then check us out on social. We're on LinkedIn. No, not LinkedIn. What am I talking about? It's
everything but LinkedIn.
Instaface.
There you go.
Instaface is what we're on. Instagram. What are the other ones? TikTok, Google Know Your Risk Podcast, or not Google. On YouTube, search Know Your Risk Podcast.
I'm sure Googling will work.
Googling will work too. Yep. Or you can just subscribe to the podcast, knowyourriskradio.com. Anyway, you guys know the drill. Have a wonderful night. We'll be back again tomorrow. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.